Welcome back. Well, the luxury real estate market in New York seeing signs of slowing following Mayor Zohran Mamdani's pied-à-terre tax going into effect. That is a surcharge on any second home worth more than $1 million. A new report from Olshan Realty finds just one 8-figure home went under contract between July 6th and the 12th. The tax went into effect July 1st. Joining me now with a breakdown is the Peebles Corporation's founder, chairman, and CEO, Don Peebles. Don, good to see you. Welcome back. Do you think it is that pied-à-terre tax that has caused people to leave New York and see a slowdown in the luxury market in New York? What are you seeing?
Absolutely. I think the pied-à-terre tax is going to destroy the ultra-luxury condominium market because most people who buy upscale luxury condos have multiple homes around the country or around the world. And now the threat of additional taxes and a potential wealth tax, people are staying away from New York. And of course, you've had a major exodus, over 210,000 net migration out of New York City in the last 4 years, which, for example, public school enrollment's down 120,000 students within that same time period. So what's happening is people are fleeing to more business-friendly, better tax environments, and also higher quality of life. And that's why I say Florida is prospering, for example. It's a big beneficiary of what's happening in New York. And now they're going to run more and more people out of New York City.
Yeah, and, you know, it's Florida, it's Texas, those states with no state income tax are really benefiting from this. Don, a report from the Citizen Budget Commission found that New York's share of millionaires dropped to 8.7% from 12.7% over 12 years. Beginning in 2010, that was the largest decline of millionaires in any state. It resulted in a loss of nearly $11 billion in state tax revenue for the 2022 tax season. So, Don, do you think that Mayor Mamdani or Kathy Hochul, the governor in New York, understand what they're doing by driving out people because of these policies, in fact, impacting their own budget?
Yeah, I think they actually do understand it. They're just not well intended. Yeah. The idea here is they want to use political rhetoric to attack wealthy people who are overly productive, people who are making the city better. They're attacking, like Ken Griffin, who has spent billions of dollars in New York City and given away $600 million to $1 billion in philanthropic investments. And they're running people like him out because they are anti-wealth. And so they don't care if the consequences are a deficient budget. They think they can tax their way out of it. And what they're going to learn is that that's not going to work because wealthy businesses and wealthy people are mobile, and others, and with technology and AI, they don't have to be in New York City. And Florida and other places are pursuing them with a pro-business attitude, a pro-business environment where they're wanted. And people generally go where they're wanted.
Yeah. That is exactly right. And we are seeing money move. I always say money is mobile. Don, many of these high tax policies in blue states causing those wealthy residents to go to lower tax states like Florida, like Texas, like you just said. What are you seeing in Florida? I mean, analysis from the Tax Foundation shows Texas gained the most tax filers between 2022 and 23. Over 56,000 moved to Texas, while California actually saw the biggest decline with more than 100,000 tax filers leaving California. Don, what are you seeing there in Florida?
Well, what we're seeing in Florida is continued growth. It's an overall mindset, by the way. I think that people want to go where there's a good quality of life, where they feel safe to walk the streets and live in their homes, and that they're valued in where they're living, and their contributions are valued. And what's happening is Florida welcomes wealth. Florida welcomes entrepreneurs and businesses. It's becoming the state of dreams. New York City was the city of optimism, the city of dreams, where you could aspire to do great things or make tremendous amounts of money and create wealth for yourself and your family. It is no more that city. And Florida is that state. Texas is that state. They value entrepreneurship. They value people, and they want to provide a good quality of life. And I think that they're going to continue to attract businesses. And California is, I mean, on a nosedive to death. And unless they change structurally and fundamentally, I think California is in for a tremendous day of reckoning.
Yeah, and New York too. I mean, what a sad situation that it was the city of dreams and it no longer is. Florida is the state of dreams. Look, Mamdani is facing renewed criticism over his controversial rent freeze policy as well. That's the rent freeze on 1-year rent stabilized leases. And analysis from the Corcoran Group found that Manhattan's median rent last month hit nearly $5,300 or $4,300 in Brooklyn. Don, what about the rent? People want to sell their home, get out of those tax pressures that Mamdani is putting on them. But if they rent, prices are elevated there as well.
Oh, absolutely, because it's so difficult to do business in New York City today. As a developer, it's difficult, and so that artificially constrains supply. The mindset of trying to tax the reducing volume of people and trying to tax businesses who are fleeing doesn't make any sense. What they need to be doing is trying to create greater wealth, to provide greater opportunities for their citizens and attract entrepreneurs to come there and build their businesses and to provide an environment of optimism. And the reality is that their policies are failing. I mean, if you look, for example, I mean, there's a tremendous deficit in terms of access to capital. There's $83 trillion invested in venture capital and private equity. The biggest investors are public employee pension systems like New York State Common, New York City Common, CalPERS, CalSTRS. And yet those investors put less than 1.3% into firms run and owned by women and people of color combined. But yet these Democrats are lecturing us on how we have to social engineer our education system, yet they're not providing access to economic opportunities to the citizens that they proclaim to serve.
Right. Well, look, there are so many implications to this. Not only are we seeing rich people flee places like New York and California, but it's impacting the budget and Mamdani's ability to actually pay for the services that those high earners pay taxes for. I'm talking about garbage collection. I'm talking about just the management of the city. What do you think happens here? How is this going to play out for New York?
Well, I think if you look at, history repeats itself. If you look at what happened to New York City under Mayor Lindsay in the 1970s, when there was all these strikes, garbage collection and so forth, and the city became unlivable. What will happen is it costs a lot of money to run New York City. And as money becomes less and less available, they will cut services. They're going to have to, because they're not going to be able to tax their way out of this. And what will happen is the quality of life will continue to diminish. And what you're seeing already is people are making choices not to be in New York City, not just to live there or to have a pied-à-terre there, but to even visit New York City and even spend their summers or their falls in New York. And so what's going to keep happening is that more and more people are going to stay away. And businesses are beginning to stay away because they're fearful that they'll be exposed to some new tax that the left wing comes up with. And I think if we see more of that, I think you're going to just see New York continue to struggle and the quality of life continue to diminish. I think the public will lose tolerance for this soon, though.
Yeah, real quick, Ashley.
Well, no, hopefully. But
The number, this is Ashley Davis, nice to see you. The number that's really struck me was how many people, over 100,000, maybe 120,000, that have left the public school system. That's really impacting the bottom line of people that live in New York because they're not getting the federal match. So that, to me, was a number that you brought up that I think is life-changing for the city.
Yeah, and interesting enough, also, what is it saying? It's saying that even the middle class is leaving. And that's a staggering thing. The reality is 45,000 taxpayers pay about half the cost to run New York City. And over the last 4 to 5 years, 20% of them have left. So if you start looking at that, that's already a 10% budget deficit that they're looking to fill. And that's why you see the pied-à-terre tax and some more taxes are coming. But ultimately, they're not even going to be able to run the public school system because it already poorly performs. And what's going to happen now is 120,000 less students, there'll be less resources. And it'll continue this nosedive. It's a perpetuating nosedive.
All right, we will leave it there and keep watching. Don, always great to get your perspective. Thank you.
Thank you.
Don Peebles joining us. Quick break and then more bizarre moments in the Big Apple. You will not believe who Mayor Zoran Mamdani decided to watch the World Cup with. We'll bring it to you when we come back. You're watching Mornings with Maria live on Fox Business. Stay with us.